The markets have been volatile to start the year. Here's a look at the stocks right now. The Dow is, well, we don't have the numbers right now.
Pick a number, any number.
Any number. What was that? 199 earlier, but not quite sure where it is.
We'll maybe Terry knows.
Yeah.
I do. I do. It's up about 350 and was up about 400 points earlier. What an incredible couple of days. I mean, I described it as a bungee jump. I mean, you know, picture that giant downward trend down 1,000, 1,100 points, bouncing back to close up. That was 2 days ago. Yesterday, same thing. You know, like in a bungee jump, they don't just stop up there. They go down again and back up. I've been wondering. I just could not explain this for everybody who's asked. And then I heard Tom Sosnoff, who's a Chicagoan who created a great trading platform called Tasty Trade. And he made sense of it for me when I heard him this morning. He said, look, we always used to think that the smart money was the big institutions, they had the research, and that the public was the dumb money, and they always got in last. He said, that's reversed now. And you have this gaming generation that is trading stocks. And while the institutions couldn't jump in quickly enough when that market collapsed in just a matter of hours, down 1,100 points, or even yesterday down 800, these individual traders who are now on these fast trading platforms step in to buy. And that the gaming generation is controlling the big swings in the market, something to make you sit back and think. They're not the dumb money anymore. They have a lot of power.
All right, let's get to viewer questions. I am 75 and have an emergency fund of $20,000 and a money market fund making 0.3%. It is safe and I can transfer money between that account and my savings account quickly. Better choices?
No, there are no better choices right now for what I call chicken money. That's money you cannot afford to lose. A little bit later this afternoon, the Fed will come out of its two-day meeting and be telling you, we're going to do this with interest rates. But it's not going to be a dramatic move. Everybody's waiting for it, but I don't expect it'll be anything dramatic. If you don't want to lose money, if you're going to have a heart attack on days like we had the first 2 days of this week, this is chicken money. And sorry, right now you're losing out to inflation. I know that, but at least you have your money there when you need it. And over the years, it'll lose value. But I think interest rates will catch up with inflation probably pretty soon if the Fed has its way.
Next question. You've spoken about giving monetary gifts to family members. If I give my daughter money, what must be done for my taxes?
Well, there's no tax consequence. For many years, you could give $15,000, but 2022, the number goes up to $16,000. You can give $16,000 to anyone, a family member, the person who delivers your mail, whoever, and there's no consequence to the recipient. It's just a gift. They don't have to declare that as taxable, and you don't have to make any kind of a return, a gift tax return. Ultimately, and that doesn't even count for when you die, if you made a big gift, $100,000 to your child for a down payment on the house. Ultimately, that would all be reconciled in the estate and gift tax when you die. Currently, well over $11 million in that kind of gift is excluded from estate taxes, a little bit less in Illinois. But the fact is, it's not a taxable consequence if you give someone up to $16,000 a year. And you can give lots of people $16,000 a year. So I'd like to get in line.
All right. Next question. My 38-year-old daughter is getting a personal injury settlement. There will be $75,000 that she wants to keep safe, but also would like some growth. What type of account would you advise?
Well, a while back, I would have answered this question by saying, you just go to Fidelity, and at your age, you should probably put, a portion of it into a stock market, S&P 500 fund, an equity income fund, set some aside. But, it's harder to do financial planning, especially if someone got a personal injury settlement. Maybe they have different abilities to work going forward. So here's a good reminder that financial planners are not just for people who are going, oops, we're going to retire in 4 years, we better get a plan. Even at age 38, you could find a fee-only financial planner, which means you're not paying commissions. They're not trying to sell you anything, and they're fiduciaries. Now, a couple of weeks ago when we got cut off, I wanted to put up the graphic wealthramp.com. WealthRamp is a matching service. It's not computerized, although you go through a questionnaire online. My good friend, co-podcaster, and a person very much like me with her heart, I hope, in the right place, matches you up with 2 or 3. Nobody's going to call you and gives you financial planners that she thinks will fit, but they're all fiduciary, fee-only financial planners. And this 38-year-old has now got a once-in-a-lifetime bonus. I hope her injuries are gone and needs to start thinking about planning for the long run. So wealthramp.com, no cost, and they won't call you. You have to go through the process.
All right, thanks, Terry. Her book is The Savage Truth on Money. And to ask Terry a question, go to terrysavage.com. Thanks, Terry.
Thank you.
All right, time now for Around Town.
Hey,